The Morning Cup is a joint presentation of WBOK 1230 AM radio and Warren Bell and Associates. For information on sponsorships or weekly advertising inside The Morning Cup, email your request to wbmorningcup@gmail.com or call 504-235-8706. Again, that's wbmorningcup@gmail.com or call 504-235-8706. And now let's go back to the Metairie Bank Studios at WBOK to the Morning Cup with Warren Bell.
That's me. 76 degrees outside, going to warm up once again to 95-ish. Yesterday was 97, and I've put off doing the lawn so much, I think it's time to face the heat, but lots of water will be involved. We're not one of those people who thinks you drink beer when you're doing outdoor work. We know better than that. We always shout out to Metairie Bank. This is that Wednesday every month when we bring someone in from Metairie Bank. Am I hearing a little echo, Lee, or is that me? Maybe it's just me. But every week we do something called Money Matters. Somebody asked me if she should turn off her cell phone, and I said, oh, no, nobody ever hears that stuff. Nobody cares anyway. But Miss Robbin Haree is the VP for Retail Banking at Metairie Bank. I remember meeting Robin way back last year when the African American Male Wellness Walk was making a presentation to the officers of the bank. And I think I've shared with you guys many times that's how I fell in love with Metairie Bank, because I said, look at these people. We asked them for one amount. They gave us more. Their president is talking all this stuff about community engagement and involvement. Who are these people from Metairie Bank? So every month you've had a chance to meet another one of the voices and faces of Metairie Bank. This is one of the prettier faces. I'm sorry. Sorry, Roy. We love Roy Forrest. That's my manager. But he doesn't compare with Robbin Haree, who is the VP for Retail Banking. First of all, Robbin, welcome to the show. You're looking all spiffy for 6:15 in the morning.
Thank you, Warren, and good morning.
Welcome to the program. And we always start with our Metairie Bank people and say, tell them where you're from, darling, where you grew up, what high school you went to, et cetera, et cetera. Let us know a little bit about Robbin.
Well, I was born and raised in the Metairie, which is in New Orleans, and I also went to school at Kennedy, so I'm a Kennedy graduate, a Kennedy Cougar.
Just like my sports director, Ro Brown, right? That's right. And went to college where?
UNO.
UNO also. She's all New Orleans, y'all. Mm-hmm. And you've been with Metairie Bank how long?
I've been with Metairie Bank 13 years.
And had you started in banking prior to? Or no, she's not old enough to have done more than that,
well,
right?
You are just so sweet.
And I'm full of bull because I also know her daughter who works at the bank in a whole totally different role. Erica, good morning. Mommy's going to do fine. Don't you worry now because she's in good hands, okay? So the topic today is the power of credit. Help us out, first of all, for folks who don't realize how important that is. How does your credit rating affect just about anything you do if you're going to be financing anything, right?
Correct. Credit scores can range from 350 on up to 850. And depending on your score and depending on the lender or the creditor, the range can affect you positively or negatively. Usually that mid-range around 650 is where that breaking point is on what type of rates you're going to get and what type of products you're going to get. So around 650 is where you can pretty much get good responses from your lenders and creditors as far as approvals. Anything below 650 is where you get a little bit more obstacles you got to overcome.
And there are opportunities for people to find their credit rating out without it causing additional impact to their score, correct?
That is correct. Usually when a creditor or a lender pulls your credit, that's called a hard hit, and that affects your score. If you're pulling your credit on your own, such as www.annualcreditreport.com or an employer pulls it, usually that's a soft hit.
So let me back up and make sure I understand. So if I were buying a vehicle and the finance and insurance manager runs a credit report on me just to see where my current score is, that could have an additional impact on my score?
That is correct. When they go to pull your credit, that's a hit because they're inquiring about you. Okay, and so the number of inquiries in your credit report can affect your credit report on an every 12-month basis.
I did not realize that. Mm-hmm. Now, when you have elderly citizens like myself who try not to ever charge anything, who don't do installment loans, who say, I'm not going to buy a new car, I'm going to get a used car and just pay cash for it. Can that ultimately create a lower credit score than someone who is keeping the beast fed with interest charges or whatever?
Yes, and the reason
Really?
why I call my segment the power of credit is because if you have no credit, it's kind of hard to move about. You can't, usually some landlords will pull your credit to make sure you have the ability to pay rent. When you're shopping for insurance, they'll pull your credit and base your insurance premiums off of that. If you're applying for a job, when you apply for a job at a bank, they typically pull your credit. So you need credit in order to move around. Just think about when you travel, you need a credit card, typically. And so trying to travel without a credit card is very hard to book hotels and, traveling with rental cars, things like that. So, yes, the power of credit is very important. No credit, it's kind of hard to move around. Good credit, you get great products, you get great rates. Bad credit, that really affects you.
So for a daughter who still lives at home, 26 years old, the current vehicle is the one Daddy provided, but when she buys a vehicle, because she hasn't created any other credit history, if you will, she could get a higher rate.
Yes.
Just because she hasn't done that.
If she has no credit at all, it's not really adverse credit. It just doesn't exist.
Right.
But you're just getting started. But if you started up your credit and you don't take care of it, like you pay things late or you have collections, even cell phones that you don't pay on time, they go to charge it off, that affects your credit, and it may affect her getting her car on her own.
So one of the bullet points that your team sent me was good debt versus bad debt approach with caution.
Yes.
How does that factor into this conversation?
Well, good debt is meaning things are paid on time, no collections, no charge-offs. Also making good decisions about when you go to borrow. So let's just say you go to borrow for a car. Making sure you have someone go with you that first time, because you could be upside down or get a bad car loan, and that could affect you. You might, you think you can make the payments, and the person selling you the car is going to convince you can make the payments. Whether you can make them or not is the good decision you have to make, because ultimately if you can't and you're 6 months into it and you start to fall behind, if you can't make the 6th month payment, it's very hard to make 2 payments in the 7th month and 3 payments in the 8th month, and that's when collections start to happen.
When your colleague Marina was here talking about the way in which you guys work with people who are on the lower income level but who still want to purchase a home, one of those assessments or evaluations has to do with what you realistically might be expected to handle, because you really should look at your whole picture of indebtedness, not just that guy in the finance office at the dealership who is clearly trying to make his hit on you, saying, this isn't a bad deal for you, right?
That's correct. I mean, usually with first-time home buyers in the low to moderate income area, they go into first-time homebuyer training to teach them those skill sets of understanding what is my capacity to be able to pay my bills. And so when you get your income on a monthly basis, typically lenders are looking for your house note not to be more than 30% and your total debt not to be more than 40%. And that's because the other 60% is for everything else you've got to afford: food, insurance, gas in your car, clothing, and also the taxes outside, taken from your income. And if you go 50% and beyond, you're flipped. And then you don't leave enough to pay for the rest of the bills, and that's when you make bad decisions.
That term upside down reminds me of the good old days when both of my brothers were in the car business, because the first time they used that term, I said, what's that mean? And, of course, just about everyone understands that concept now. Your comments just now reminded me also, so the ideal scenario is that 30% of your income would cover
housing.
Exactly. And yet we live in a community where we know that so many of our citizens are forced, because of high rents and the lack of affordable housing, to spend over 50%. Talk about being behind the 8 ball.
That is behind the 8 ball.
Credit-wise, finance-wise. So what kinds of things are in a credit report? What can people do to improve it? Because I guess the most important information for folks today is if you're in that, I think you said 650 was like a minimal number?
It's like the average. It's the average.
If you're below that and you know you want to do some kind of purchase in the next year or so, are there basic tips one can use to do a better job on enhancing your score?
Yeah, if you're below 650, that means there's something out there that's pulling it down, whether it's delinquent payments or a collection item such as a cell phone bill, you want to get those collections items paid off, settled, and then start paying on time. You've got to it's almost like rebuilding your history, but it takes a little longer because there's negative impact you've got to correct.
Rebuilding is much more challenging, or it takes more steps than starting right and not make it. So what are the things to never do if you don't want to have that negative hit on your credit report?
Mostly pay your bills on
time.
Pay your bills and pay them on time. I also advise people to be careful when they are endorsers, because endorsers go in trying to help someone get themselves started. And
the famous cosign line?
Especially like cell phone bills. I see a lot of cell phone bills. People will go in, young people will go in to help their friends get cell phones, and then before you know it, they come out of college wanting to buy a home, and there's charged off cell phone bills, things like that are on there, or rents, leasing agreements that they may walk away from, and those
But they walked away from them, but those agreements or what they left behind can find them no matter what, right?
Can find them. All of a sudden, it's a collection on their credit report.
Wow. So to get that copy of the credit report, you mentioned a website earlier. I'd like for you to repeat that, because this is a way to get it free and not have the negative impact of someone checking on your credit report when you're in the finance office about to make a purchase or something.
Correct.
Right? And what was that site?
www.annualcreditreport.com.
Oh, annualcreditreport.com is what one is searching for.
Yes.
And it's one word, and there is no fee, and there's no impact on your credit score.
Correct. When a person pulls their individual credit score or credit report, it does not impact. That's called a soft hit. Mm-hmm.
I'm still thinking about the question I asked Robbin about myself. So by not ever having an installment payment for the last, I don't want to think about that, but because I guess that's a blessing on one hand, but if I were to try to make a major purchase, that would impact my credit score.
Yeah, because you want to keep your credit report constantly moving, meaning you want to add new items on there. You want to pay your existing items. You don't want to remove good history from the past because you want that good history there. But I always tell my borrowers, my first-time home buyers that are building their credit, you don't have to be in debt all the time to have credit, meaning you can have a credit card, and as long as you're using it and paying it back on time and paying it in full every month, the credit reporting lenders have to report on your credit month by month by month because you're using it. So it shows that you're paying on time. When you don't use it, there's nothing being reported.
Thank goodness. You just explained to me why I shouldn't be so concerned, because we use that Costco Visa card like the only thing in the wallet, because, well, the missus knows the value of a refund check every 6 months. Everything you spend, you get a little piece back.
Yes.
But by doing that, I may not be in the position I'm describing for myself.
Correct.
Because there's a regular history of charges and payments that goes on. Oh, I feel better. I hope other people feel better out there. At least I got some valuable information.
You are actually
here.
An example of what I use with my first-time home buyers, because you're making your credit card work for you. You're not paying the interest because you're paying off monthly, but you're getting money back at the end of the year. So you're earning money.
Yeah. It's not a bad check twice a year.
While you're using your credit card, you're still keeping your credit alive and moving. So.
Of course, you have to buy 500 gallons of something just to get a good deal at Costco. Oh, no, we love our Costco. Best meat in town as far as I'm concerned. Any other thoughts about credit or things people should know? Because we are at that time in the show where I have to make room for the handsome, brilliant man in the next room, the mental provocateur, as I'm calling him lately. Oliver keeps us thinking. But any last thoughts for people to think about as we wrap up this segment on credit?
If you're young and you're just starting out and you want to build credit, a lot of times you're working typically and you might get a tax refund. I'm just using that as an example. Take that tax refund, put it in a savings account, and get a secured loan against it. That's your first opportunity of building your credit, especially if you don't have someone to endorse for you or co-sign to help you get started.
And if you don't follow that, her name is Robbin Haree. She's at the main branch of Metairie Bank and Trust. If you're heading towards Sam's, that's the big sign on the right just before you get up there. The actual address is on Metairie Road. I always have to remind myself for that, because the first day I asked my station manager to come out and make a presentation for this show, I said, you just go down Airline Highway. She was miles away, forcing your CEO to wait for her patiently till she got back. So remember, folks, the main branch of Metairie Bank, where you can meet all these fabulous people you've been meeting. Well, Roy is at my branch, Jefferson Highway. I like it out there because that's near Oxnard, where I have to go to see Mama this morning, I might add. So may pay a visit to you too, Roy. Roy Forrest was in the room, but our special guest is the lovely and talented Miss Robbin Haree, Metairie Bank VP for Retail Banking. Thank you so much.
Thank you, Warren.
We're done. Time now to say goodbye.